Well, just take us through what you make of the comments in the last few days. Mersch, of course, saying ECB needs to have QE prime just in case it's needed. Nowotny saying there's no need for immediate action. What do you make of all this?
Yeah, I mean, I think the first thing to note is that the problems of measuring prices within an economy, it's just such an inaccurate game that could already mean that we're already in deflationary territory in Europe across the whole board. That's just something to bear in mind. And in such a context, would be very surprised if the ECB wasn't very seriously tabling measures such as QE and considering them. On the flip side, we'd sort of sympathise with the view that actually there's no immediate need for anything more aggressive just yet. 2/3 of the fall in price has been down to external factors outside of the Eurozone, so fuel and food prices have been very instrumental in that. And actually, if you look further out, which is something that Draghi has been continually pointing to, it looks like inflation expectations are still pretty well anchored.
Okay, well, so to what extent are these comments to do with actually keeping the euro low, do you think?
Yeah, I mean, it's very difficult, isn't it? It seems like, they've been talking down the euro for some time without that much success. And it seems it's hard to imagine that they're going to have much success this time round. I don't think that the market is expecting a sort of massive QE program. And I think probably the dollar, the euro sort of on a medium-term basis weakens relative to the dollar, but that's more down to dollar strength than euro weakness.
Let's talk about Greece now. Well, first bond sale in 4 years. Market generally thinks that it will get away. Do you agree?
Yeah, it's interesting because Greece has done pretty well. I mean, we've got coming up likely discussions about some sort of reorganisation of Greece's debt pile, sort of on behalf of its good behaviour from its European creditors, and I think probably that'll see some sort of lengthening of the terms and maybe some fixing of some interest rates. And alongside that, we've had some better data out of the Greek economy for the last 6 or so months. And admittedly, the unemployment data that we've had has been positive, mainly because workers seem to be moving from the informal to the formal sector thanks to a sort of tightening of the noose from the tax collector. But although that's superficially positive, it is a positive because it helps the government balances. And so generally, we think there's good reason for that. It seems like the market is in the periphery, that yields are continuing to come down, borrowing costs are continuing to come down in the periphery, and that would it's not surprising that Greece wants to take part in that.